there has been a steady growth in the retail market, retail turnovers since 2012 in Hungary, and the basis of that was the better economic performance. The market was dried out for 3 or 4 years. No major, or not even major, minor retail developments were actually missing. Now, developers are out there and trying to find retail development opportunities, but this is very complicated because it's not enough if you have a good site, if it's not enough if you have a good catchment area or financing. If the location itself is not good or if the city is saturated, then you cannot go for retail developments. If there is any new possibility arising, then developers will grab this definitely, but this is something that has to be looked at very, very carefully. We got a shopping center development in Budapest on the Buda side. This is a perfect location because the new Metro Line 4 was finished 2 years ago, and basically this infrastructure development triggered our shopping center project. That region in the city is developing, but basically any kind of property development in Hungary was based on the changes of the macroeconomic figures, and the National Bank of Hungary took measures last year to handle 2 critical issues. One issue was the household loans. There were, I would say, 90% of the household mortgages were denominated in foreign currency, Swiss francs and euros, and all these were just transformed into Hungarian-based loans. It was a very important step because basically we eliminated the exchange risk, and also the National Bank or the government set up a national asset management company which took over all the non-performing commercial real estate assets, and this helped a lot to the liquidity of the market. And all these issues are supporting or boosting the developments, retail as well. In Hungary, there are the international fashion brands, and basically 90 or 95% of the tenants in a shopping center are international brands. As for the second part of your question, the prime end of the market is very thin. There is very low liquidity, and international investors are increasingly trying to focus on subprime assets or schemes with upside potential. I think that's the way they are moving ahead, because there are, as far as Hungary is concerned, there are not many new retail developments. The other issue is that is the limited number of the developments, and also that the best performing assets maybe have traded recently, so current holders don't want to get rid of them.
Okay. Clearly for Warsaw and Prague, that's an issue because the top 3 shopping centers in Prague are held by Unibail-Rodamco, and out of the top 3 in Prague, 2 of them are held by Unibail-Rodamco. I mean, God knows how they got through the anti-monopoly clearance, but you know, it's a fact. So yes, you know, investors by definition therefore tend to sort of look at secondary cities, and one of the problems that you do have in Poland in particular is oversupply. There used to be, I don't know whether it's still the case today, but there used to be relatively low barriers of entry, and you do have some cities like Poznan or Wrocław where you clearly have oversupply and where there are too many shopping centers and at least 1 or 2 of them shouldn't have been built. But still, people go ahead and build another one. There are some cities that will see shopping center casualties, and you therefore have to be a bit careful and look very, very clearly at the individual assets in some of those places.
But to follow on from what Mark said earlier, what we have seen is though consumer spending increasing, so that will help retail market in this part of the world. But also the retail market's been going through quite a lot of change in the last 3-4 years in Central Eastern Europe. What you found is older centres are being refurbished, food courts are being expanded. Traditionally, shopping centres in Central Eastern Europe were always hypermarket anchored, so a large 8,000, 10,000 square metre hypermarket. Now the hypermarkets, Tesco, Carrefour, Ahold are coming back to landlords saying we don't need this much space, can we half our store, which gives back some space, allows H&M to move in at a higher rent. So a lot of this turnaround, refurbishment is going on. There's been very little development in the the last 5 years there's been some. Compared to the period of 2000 to say 2010, there was a rapid increase of shopping centre development. It kind of slowed down, maybe due to definitely due to saturation, also due to what people have in their pockets to spend. But as the population is getting wealthier, that will also help retailers. I suppose the other change that we're seeing is the click and collect issue, and that it feeds into Ian's business, because that's a dynamic that's playing its way through our markets as well as internet sales increase. And we've actually seen internet retailers moving into bricks to some extent in some of these markets as well, which is an interesting dynamic.
Good. One last point. I think it's also important to understand that in Poland in particular, shopping centers play a slightly different social role. There was a question before about high street retail. There is virtually zero high street retail in a place like Warsaw. And shopping centers take over the role of high streets. At least until now, they are able to open on a Sunday as well. So it's not like you've got restricted opening hours. There are some debates about that in Poland at the moment. Hungary actually did it and closed down on Sundays about 2 years ago, only to reverse the law a year later. And now we've got Sunday opening in Hungary again as well. So shopping centers do also have, to an extent, the role of what would be covered by high streets here in the UK.